And we're live. Good afternoon, people. Welcome back to another Crypto Sherpa news video. I'm your host, Paul Bucci, here to bring you the daily crypto news. In today's news, we got JPMorgan is on a blockchain hiring spree. Woo! Coinbase is sued over a Dogecoin sweepstakes. That's right. What else? Elon Musk, Jack Dorsey, Cathie Wood are about to talk on the B word in a couple of days. And Binance burns $390 million in BNB. All that and more. So please stay tuned, people. All right, we are back. All right, let me share my screen with you so we can get going. Beforehand, please give this video a thumbs up, like, share with your friends, because if we get to 500 subscribers, I'm giving away 500 Divi. That's right. If you don't know about the Divi project, sign up for my Patreon account and learn about it. They are making crypto made easy. So yes, let's dive right on in. Let me share my screen with you so we can get on to our first article. Lots and lots of news today. Okay, here we go. JPMorgan is on a blockchain hiring spree. What? But yeah, thank you JPMorgan for opening up my bank account with you guys. So I am almost set. Just gonna set my website and we are good to go for cryptocurrency consulting. So if you guys want to learn about how and what is cryptocurrency, I'm the guy to tell you about it. So sign up for my Patreon account down below, follow me on Instagram, and just shoot me a message and we'll get things rolling. But let's dive right on in. So JPMorgan is on a hiring spree for its blockchain unit, seeking to fill positions across audit, engineering, and marketing. Several LinkedIn postings revealed the bank, which has been active in the blockchain space for several years, announced in October 2020 that it would bring all of its blockchain-related products and services under a new business unit dubbed Onyx. Those services including Link, a blockchain network of hundreds of financial services, firms, and corporations, as well as its coin systems business, as per its website. As for job ads, JPMorgan has plastered dozens of new postings on LinkedIn, including engineering-related roles. One role for the blockchain platform software engineer is looking for someone with a background in a proof-of-stake, Ethereum, and Bitcoin, and will create a forum for innovation with a blockchain technology community that drives thought leadership around digital architecture, roadmaps, and strategy. There's also evidence the firm wants a stronger external presence for the blockchain work being worked on at the firm. The individual will drive the Link marketing strategy by developing a thorough understanding of a strategic objectives, positioning, brand voice, and offerings so that you can create consistent and engaging content across multiple touch points. The ad reads, the person hired would be tasked with creating marketing strategies that spark engagement both internally and externally. The bank added that they want the person to have a sense of humor that is touch irreverent. JPMorgan has already made quite a number of big ticket marketing hires for Onyx at the beginning of the year. Ariana Giannakopoulos, former VP of the Global Commercial Marketing at Condé Nast, joined the firm as a marketing director. Ray Behari, previously a marketing executive for IBM's cloud service division, also joined at the beginning of the year as head of marketing at Onyx as per his LinkedIn. So yeah, JPMorgan's on a hiring spree. These guys are one of the first guys mainly to be really adopting the crypto world. Like they are getting into it, they want to test probably CBDCs there or whatnot, but like they are on board faster than the other banks. But yeah, we have news articles previously as well that 600 banks will be coming to the United States and will be accepting and holding cryptocurrencies for you. Honestly, I say do your own research so you can educate yourself that you hold onto your keys, because it's like the silver market, people. If you don't hold it, then you don't own it. So get yourself a non-custodial wallet, write down your seed phrase, private keys, and keep those hidden and safe from the outside world because they're only for you to know. Alrighty, so that is the JPMorgan news. Let's move on. Next article we got going on is stablecoins are not money, says Fed attorney. Private stablecoins do not satisfy the no questions asked NQA principle, says a paper authored by the Federal Reserve attorney and Yale economist. That's a nice little artwork, but a new paper titled Taming Wildcat Stablecoins has laid out regulatory options for the US dollar stablecoins. Paper discusses stablecoin risks. A new paper authored by U.S. Federal Reserve Attorney Jeffrey Zhang in collaboration with Yale economist Gary Gorton has suggested a regulatory framework for stablecoins. Today, there are over $100 billion in U.S. dollar-backed stablecoins issued by various private entities, Stablecoins are backed one-to-one with the USD, have exploded in popularity, primarily as a replacement for the traditional banking system for the cryptocurrency sector. Well, it is kind of true. When you got stablecoins out there, people are using them because they get like 15, 16% back on their year just for holding a stablecoin on some exchange, while your traditional banking system will only pay you like 0.01% on your savings account. So stablecoins are being used, but a lot of them aren't even backed one-to-one by the US dollar. As Tether or USDC, I keep forgetting which one it is they announced in their latest quarterly that they have like their coins are not officially backed by all dollar USD coins, but other assets as well. But yeah, that's stablecoins for you. But they're being used. Their popularity has raised concerns from regulators who have spoken about the risks stablecoins pose on global financial stability and their impact on traditional monetary systems. According to Zhang and Gordon, while stablecoins issued by private companies have seen significant adoption, they need to be regulated to reduce the potential risks to the US economy. The biggest risk we got is if we keep printing money, but that's just me saying that. But they use the analogy of the free banking era, the period between 1837 and 1863, in the US when private banks and businesses could issue their currency notes backed by gold and silver. At the time, privately issued currency traded at different prices based on the perceived risks and geography of particular issuing banks. Many eventually failed within a short time span for not satisfying no questions asked, a principle that currency be accepted in a transaction without any questions about its value. The duo wrote that users may not be convinced of the value of the stablecoins, similar to the banknotes in the free banking era. They also said that stablecoins failed to satisfy the principle of no questions asked, due to the market fears and lack of transparency surrounding the funds backing them. On this issue, the author stated, "We argue that because of the credibility issues with respect to their backing, stablecoins are not yet money because they do not satisfy the NQA principle and so cannot be efficiently used as a medium of exchange." The author added that the value of various stablecoins such as Tether remains opaque due to a lack of transparency and hence pose risks like a bank run. This lack of transparency, the author said, is a significant concern for the fast-growing stablecoin market, they said. Stablecoins are not perceived as safe because coin holders have suspicions about their backing, then they may be inclined to run on the issues. Putting forward these arguments, the author stated that the government should have a monopoly on money issuance. Finally, the author suggests two options for the US government and Federal Reserve to regulate this sector. The first suggestion involved converting stablecoins into public money backed by the central bank treasuries as an insured bank regulatory perimeter. The second option was to tax all private stablecoins once the Fed launches its own central bank digital currency. The paper concluded by suggesting that the Fed should hasten its plans to launch a CBDC. The paper comes just a few days after Fed Chair Jerome Powell discussed stablecoins and cryptocurrencies with the Senate Banking Committee, where he iterated the regulators should look into commercial stablecoins issued by private entities. Meanwhile, the U.S. Treasury Secretary Janet Yellen is due to discuss stablecoin regulations with a working group on financial markets. Should such regulations come into play, they are bound to leave an impact on the broader cryptocurrency market. So yeah, there you have it. Stablecoins are not money. They aren't, because it's not backed by digital currency. And who says Bitcoin even is currency? My last article yesterday, Michael Saylor says Bitcoin is not currency, but more of a digital property where you can own a piece of it. So yeah, that's the stablecoin news. And yeah, let's move on to our next article because there is so much to be said. You miss a day, you miss a lot. In our next article, we got Coinbase, which is sued over Dogecoin sweepstakes and ad campaign. First off, never trust your money on Coinbase or any exchanges at all, because like I said, if you don't have control of your money, then you don't own it. So if you use Coinbase and keep your money on there, then they're in control of your currency. And second, don't trust Doge. It's like the US dollar. They keep printing like 10,000, or they create 10,000 new Doge every day. And yeah, it's an inflationary token, so it's just going to keep losing value. It'll do great in bull runs. It's a meme token. Everyone loves the Doge. Even Elon Musk loves the Doge. But just be careful with your money, people. Do your research. But a Coinbase user has filed a class action lawsuit seeking $5 million in damages because of an allegedly misleading Dogecoin campaign. In the legal document, David Susky, the plaintiff, said he was deceived into trading $100 of Dogecoin for an entry into a $1.2 million sweepstakes. offer on Coinbase. The document claims that Coinbase failed to communicate that a person could enter the sweepstakes without even purchasing $100 of Doge. The first day Dogecoin was available for trade on Coinbase, June 3rd, the company sent out an email to users about the sweepstakes staking, trading Doge, win Doge. I remember that email. I already see that as like, I'm not doing it. The email had details on how to enter through trading, or if a person was to go on a separate rules and details page, they would find that you could also enter by sending Coinbase a 3x5-inch index card. The index card needed to have the customer's name, address, email, phone, and date of birth written on it in order to enter. It seems like a lot of data you don't want to just give away to somebody, but okay. But in the document, the plaintiff alleges a campaign promoting the sweepstakes was misleading because anyone could enter free of charge by mailing an index card with the required information. It then alleges advertisement for sweepstakes was designed to deceive and confuse the plaintiff and other customers into trading $100 worth of Dogecoin in order to qualify for the entry. The document also said that if the ads were made clear about 100% free entry options, the plaintiff would not have given Coinbase $100 or paid the commission for the trade to acquire Dogecoin. As he already had 1,000 Dogecoin in his account with another company, the class action complaint states, the only reason the plaintiff undertook to buy more Dogecoin from Coinbase was because the company led him to believe that doing so was necessary to enter Coinbase's 1.2 million sweepstakes. The lawsuit seeks more than $5 million in damages on behalf of the plaintiff, Susky, as well as millions of other Coinbase users. So, Coinbase. You're going to be up there with Binance soon. If you haven't heard about Binance, they have been doing a lot of sketchy things. I think they burned something in one of these articles, but they're like withholding like Theta tokens where you cannot trade or move them, and they're pretty much forcing people to sell them like on their price at their price. So they are definitely manipulating the market. Coinbase, I don't trust them because they're an exchange, and who knows if they even have all the Bitcoin that they say they do have. But that's that. Be careful, people out there. Don't trust exchanges. Hold on to your own cryptos. Next up, we have Andreessen Horowitz. They appoints 30-year-old Ariana Simpson to help manage the $2.2 billion crypto fund. It's a young person's game. I'm 30. Why not hire me? I'm just kidding. But venture capital firm Andreessen Horowitz has promoted a 30-year-old Ariana Simpson to help manage the $2.2 billion cryptocurrency fund. Simpson, who joined the firm less than a year ago, has been promoted to the general partner position from a deal partner barely a month after the firm raised the fund. She joins other partners, including Ali Lahale and Katie Yuan, Chris Dixon, in managing the firm's venture in cryptocurrencies. Andreessen Horowitz has invested in high-profile companies, including Coinbase and Facebook. Over the years, Simpson has gained popularity within the cryptocurrency circle alongside a catalog of high-profile jobs, including a global marketing position at Facebook. She has also worked at the digital asset trust company BitGo. Simpson is on record saying that Bitcoin's white paper is the most important innovation. Interestingly, while at Facebook, she attempted to convince the company to venture into cryptocurrencies earlier before unveiling the Libra project. That was a failed project. But amid the cryptocurrency price correction, Simpson explained the importance of such market conditions, according to Simpson. Let's see, so she says, you have to really separate the short-term prices from what is fundamentally being built. You just kind of ignore the headlines and just focus on the technologies. Bear markets are often where the real work happens. So here's her tweet. Some news I'm thrilled to be taking on a new role as GP in the 16Z crypto fund. So grateful to my entire team for this, but most of all, to Katie for bringing me into the @816Z fold last year. Can't wait to keep backing amazing entrepreneurs in crypto. So yeah, I agree with crypto. Like you, what's her name, Simpson? Like because like you have to understand like the big deal is like don't worry about the price, short-term game. Just focus on the technology. Cryptocurrencies is just a byproduct of the blockchain, and the blockchain is all about peer-to-peer transactions where you're getting rid of the middleman. And I like what she said about like the Bitcoin white paper. Like has a big, how does she say about that? It's like a big role, but it's like big importance, like with what's going on. Because like in those white papers, like the first sentence is Bitcoin, a purely peer-to-peer version of electronic cash that can be transferred from one person to another without the need of a third-party financial institution. And right there, boom, that's blockchain technology for you. Like, you're getting rid of the middleman. Like, we do not need that. And there's so much you can do with blockchain technology other than storing and transferring data. Like I was saying with Theta earlier, they have the biggest real life use case right now, which is solving the broadband issue where they use blockchain technology to stream data and video streaming through their consumers on the either Theta television network. And also, if you don't even know it, YouTube will be using them as well. So that would save them at least 30 to 60% of their broadband issues. So keep doing your research, people. This is some great news out there. I like seeing all this going on. But let's go on to our next article because there, like I said, I got like 4 more, and I always like trying to keep these videos under 30 minutes if I can. So next up, Jack Dorsey, Elon Musk, and Cathie Wood set for a live talk during Bitcoin conference this week. Yay, I'm gonna watch it, but we got Jack Dorsey, the king of censorship, blocking everyone on Twitter. We got Elon Musk, the king of FUD, and pushing a crappy coin called Doge. And who's Cathie Wood again? I always keep forgetting about who she is. But they're going to be coming up in the next couple of days to talk about this. Let's read the article. The Bitcoin Center conference, the B word, has been confirmed for this week, as well as entrepreneur Elon Musk's attendance. Musk, the CEO of Tesla, will participate in a live discussion with Square and Twitter CEO Jack Dorsey and ARK investor, founder, and CEO Cathie Wood during the conference, which will commence at 12 p.m. on Wednesday, July 21, so 2 days from now. Other presenters at the conference include Stephen Lee, Connor Oakes from Square Crypto, Hong Feng from OKCoin, Philip Gradwell from Chain Analysis, Dr. Neha Narula from the MIT Digital Currency Initiative, Adam Back from Blockstream, and Sam Corris from ARK Investments. So there's going to be a couple people here. I'll still, like I said, I'll pay attention to what's going on. I'll give you guys an update on what happens in a couple days. But yeah, word is that Musk would potentially participate in a live chat with the Bitcoin supporting Dorsey emerged late last month. Through subsequent development, and now acquitted that the B word wasn't done deal until Monday's developments. So really, it wasn't a done deal. They've been like promoting this. I remember I went over this a couple of weeks ago when it was first mentioned. I think that was during like the Bitcoin conference in Miami. But so I guess it just got confirmed that it is going to be taking place. So good news. We're going to be paying attention to that. And let's just see what they have to say about it. Sure, Jack Dorsey's probably going to talk about his upcoming wallet that he's building that's supposedly decentralized and you're in control. I doubt it. And Elon Musk will probably push some Doge or Shiba Inu stuff. But we'll have to wait and see what's to happen. So let's move on to our next article. Polygon launches blockchain gaming and NFT studio. Pretty nice. Through Polygon Studios, Polygon is attempting to corner 2 key segments of blockchain industry, gaming and non-fungible tokens. Look at this, a Lara Croft with 2 PS5 controllers. That's PS4. PS5 is a white system. But Ethereum Infrastructure's developer, Polygon, has spun off new subsidiaries to advance its work in blockchain gaming and non-fungible tokens, or NFTs, offering further insight into the company's long-term growth strategy. The newly formed Polygon Studios has 3 core objectives: establish Polygon's position as a leader in decentralized gaming, create a brand that attracts developers and investors to its NFT ecosystem, and position Polygon as the best venue for transitioning to Web 3.0. If you want to know more about Web 3.0, I really recommend you take a look at Ivan on Tech on YouTube. He does a great description on Web 3.0 and how like the internet has been upgrading through the years, from like emails to streaming to what we're going to be having now. So yeah, go take him a look. I'll put a link down below for his channel so you can go take a look at it. But through an initiative called Polygon Gaming Studios, the company aims to help developers create and market decentralized games. A separate initiative, Polygon NFT Studio, aims to help brands and intellectual property owners launch customized digital collectibles and marketplace. Hopefully if they do that, it's like a cheap thing because NFTs are pretty expensive in some areas, especially on the Ethereum network. So hopefully they have a more affordable one to go by. But with the launch of Polygon Studios, games get 360-degree building support, big brands, and much-loved franchises can launch on Polygon, and gamers can enjoy a whole new world of play to earn opportunities and decentralized gaming. The company said on Monday that Polygon has quickly emerged as one of the more developer-friendly platforms in the blockchain industry. The platform added 75,000 new users over a 7-day period in May and has been the source of major partnerships around decentralized applications. Billionaire investor Mark Cuban has also backed Polygon for its technical prowess and growing user base. I don't know if that has, by just throwing the name Mark Cuban out there, he hasn't been very wise with his cryptocurrencies. If you can't remember, he lost a lot of money on the Titan token because that was a rug burn operation. He said he didn't do his research, and now he's investing in some token called Olympus, another ERC20 token. But yeah, good luck, Mark Cuban. Both those coins had an ICO, and one of my rules, if you don't know, don't trust a token that has an ICO, because the risk to that is it's not decentralized, it's centralized. And also, the SEC can go after them. So you go to bed one night and you wake up, the SEC, bam, hits that token with a lawsuit. You can't trade or do nothing on any platform because of it. So that is too much of a risk to handle. So be sure to do your research, people, and check if the coin you invest in has an ICO, IPO, or IEO. They stand for initial coin offering, initial public offering, or initial exchange offering. So that was just a tip of mine to give to you. Let's see. I'm going to skip that. We got 2 more articles to go. Let's just finish strong, people. Binance burns $390 million in BNB, implying $2 billion quarter 2 profits. The exchange pledged to burn tokens equal to 20% of its quarterly profits. The key takeaways is that Binance has completed its 16th quarterly Binance Coin BNB burn, a regular practice that keeps the coin value strong. Over 1.2 million BNB tokens have been destroyed, equivalent to $390 million at the time of the burn. The amount burned implies Binance made close to $2 billion in profit since April. So yeah, that was a pretty much quick update on this. Didn't really want to read this entire article. I saw that was huge. But Binance tweeted earlier today that it's, in summary, 1,296,728 BNB tokens burned by Binance. The remaining 16 million BNB unlocked and moved to a team address according to the schedule in the white paper. Binance team has never used or sold a single team. BNB thus far only burned them. Outlined in the original Binance Coin white paper, the company pledged to burn BNB tokens equal to 20% of its quarterly profits. With BNB's tokens valued at $390 million burned this quarter, Binance should have made close to $2 billion in profit since April, despite the exchange removing over 1.2 million tokens from circulation. The price of Binance Coin did not react to the news. By burning so many BNB tokens, the exchange aims to increase scarcity and maintain the token's value, while also benefiting those holding the token as of the latest burn. Approximately 16% of the 200 million BNB initially minted have been destroyed. So far, the exchange plans to remove an additional 35% of all the tokens through future burns. So yeah, 16% of the 200 million, that's still quite a lot of tokens out there. Like, what is Bitcoin's max amount? 21 million? Yeah, that's right. Bitcoin's only going to have 21 million tokens. 5 or 6 million's gone forever. So really, there's like only 15 million Bitcoin out there. Yeah, there's only really, in reality, like, sure, you may see the circulating amount saying there's 18 million in current circulation. But you got to remember, people who lost their hard drive by throwing it away, by forgetting their seed phrase, forgetting their password, it's still in circulation, but it's lost forever. So you got to keep that in mind, people. Like, this is a lot of tokens out there. I wouldn't keep my money in there. And plus, Binance and exchange. Don't trust exchanges, like I said, with the Coinbase people. But yeah, that's Binance news, burning BNB tokens to continue on their profit gains. But yeah, that's that news. Let's move on to our last article of the day. Senators call for American athletes to be barred from using digital yuan during the Beijing Winter Olympics. A trio of U.S. senators said Monday that American participants in Beijing Winter Olympics set for 2022 shouldn't use China's digital yuan, which potentially play a role during the event. Chinese officials have said that the digital yuan may be rolled out for the wider use during the winter Olympics, building on months of tests that have grown in scope across an array of cities. In the country's plans for the ECNY continue to be made public amid those tests, including support for smart contracts. China moved to embrace a digital currency has turned heads in the halls of the U.S. Congress. with the project being cited as a source of competition between the Chinese and American governments. Indeed, the ECNY project has spurred political calls for a digitized dollar as well. The negative view of the digital yuan was put in stark relief in Monday's Senate letter penned by Senator Marsha Blackburn, Cynthia Lummis, and Roger Wicker. Addressed to the United States Olympic Paralympic Committee, we write to express our concerns with the Communist Chinese government's plans to officially launch the digital currency electronic payment, commonly referred to as the digital yuan, prior to Beijing Winter Olympics in 2022. Specifically, we urge the United States Olympics and Paralympics Committee to forbid American athletes from receiving or using the digital yuan during the Beijing Olympics. The digital yuan is the People's Bank of China's central bank digital currency. The digital yuan is entirely controlled by the PBOC and can be tracked and traced by the central bank. The digital yuan has been in the works since 2014, but only recently has the Chinese government released key features regarding the digital currency, including the ability of the government to know the exact details of what someone purchased and where. The senators went on to write that the group is seeking a Senate Committee in Commerce, Science, and Transportation briefing on the topic, and said its request is aimed at protecting the privacy of American athletes from Chinese Communist government. That is true. That is good. If you use that coin, you're going to know what's going on or what's happening. But that's why a lot of countries out there are trying to work on a centralized bank digital currency for their own country because they want to stay in control of the finances. They want to know what you're spending your money on. They want to know who's earning what. But that's the beauty about Bitcoin, Litecoin, and other truly decentralized coins out there. Sure, you can see what's being spent, but you can't truly know what's being spent on what. You can see which account has. You can see which account has how much money is in it, but you don't know who owns the account. That's the sweet thing about blockchain technology. It's a completely open source ledger. Anyone can see what's going on, but only you are in control of your finances, your coins, with your seed phrases or private keys. So remember, no one's ever in physical holding on their cryptocurrencies. The cryptocurrencies are held on the blockchain, and to gain access to those coins on the blockchain, you need the seed phrases or private keys. But yeah, everyone's working to try to stay in control, and that's why they do not like Bitcoin or Litecoin, because they have no control over it. They can't make more of it and whatnot. But yeah, so there you have it. For the next Olympics, don't use that digital yuan. And to finish things off, we go over the current market cap. We have been in a downturn. Bitcoin's touching 30,855. I'm still loving this right now because we're not in a bear market. Sure, it went down 50%, but we are still up 3x from where we were last year. So these are just trends of the cycles. The market's extremely volatile. Expect bigger ups, bigger downs, but it's going to keep happening. And eventually, there's not going to be any more Bitcoin to be trading, and then it's going to be skyrocketing from there. So get it while you can. These are great deals. Don't FOMO into wishing you could have bought a Bitcoin at 30,000 once it hits 100,000. So yeah, let's see. Binance is at 281, still down by 10-11%, even after that burn. Cardano's at $1.13. Dogecoin's at 17 cents. Uniswap 15. Litecoin took a little dip. It's at 114. Let's see. Stellar's at 21. Theta's 413. It was at 409. Was the lowest. Tron is at 5 cents. Monero is 189. Crypto.com is 10 cents. And the Shiba Inu is blah, 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 blah. I can't even know how low the number that is. And lastly, as we always like to take a look at the Crypto Fear to Greed Index. This is going to update in about 33 minutes, so darn it. Wish I could have got that new one, but I'll definitely give you the new update. We're currently sitting at a 24 of extreme fear, so that is still good news that we're in extreme fear. Great buying time. For those of you who don't know, this is a great way to tell if you want to buy, trade, or hodl your coins at the moment, because extreme fear can be a sign that investors are too worried. That can be a great buying opportunity, but when that graph hits greedy, when investors are getting too greedy, that means the market is due for a correction. So yeah, when Bitcoin was at the 60,000 mark, Ethereum was at 3,000, Litecoin was at $400, we were in extreme greed. It was at 89. So it's I knew I was still buying, because you always want to keep stacking those sats, stacking those coins. Just get it while you can, because these are great prices. I knew the market was going to be due for a correction, And where you have it, we're back in extreme fear. We had that dip. So this is a great way to take some profits and still hold on to your coins. But there you go, people. That is the daily crypto news. For those of you still with me, I really do appreciate that. Love you guys so much. And yes, beta under 30 minutes like I always do. But guys, yeah, please give this video a thumbs up, share it with your friends, subscribe. Because if we reach 500, like I keep saying, 500 Divi. Say it with me. You guys, one lucky person is going to get 500 Divi. And sure, Divi's at 4 cents right now. By the time I get 500, who knows? Divi can be at $1, and then boom, there's $500 just given away. But yeah, so please, again, thank you guys so much for watching. I appreciate every single one of you that support this channel. And in case I don't see you, I hope you have a great morning, afternoon, evening, or night, and just stay cool. It's a hot one out there because it's summer. So guys, thank you so much for watching, and I will certainly see you tomorrow. Crypto Sherpa is out. Bye, guys.